Ashley Swordsman here, July 15th, 2022. Yesterday we had a really wild market day. We saw the dollar ramping, and that basically weighed on all commodities and markets. Pretty much everything was down a lot, at least at some point in time during the day. Silver actually was close to being down 6%, and you don't see that too often. But obviously, that looks, like capitulation selling at the end of a downtrend. I mean, what happens? I mean, at some point, people just basically throw in the towel. It's like I'm holding out, and then I've had enough. I'm selling out. Basically walking away in disgust. I mean, that's what typically happens at the ends, and I mean the opposite happens at the tops. Everybody's piling in, and now everybody's selling out. And I mean, since I'm a stock picker, I'm a value investor. I invest in juniors. It's like I don't care really what the dollar does. I mean, if you, my focus is on what do I think the company can do. What kind of value can the company create? I mean, if a company can grow its resource by 100, 100, 200% over the next year, or I mean, some juniors gonna grow that way more than 100, 200%. I don't care what if the dollar's up 1%. I don't care if gold is up or down $100. I mean, the value creation, the internal value creation, uh, impacts actual value a lot more than what the actual price of the metals do at any point in time. Of course, depending on what kind of company you have. If you have a very mature junior with a big resource that can't really create much more value, so the internal value is stagnant. Then it just changes basically depending on what the price of gold is. And since the price of gold and silver is affected by the dollar, that gets affected by the what the dollar does. But that's not my cup of tea. That's not the game I'm in. I'm in the game of picking the companies that where the internal value creation, what the company does, is you know 10x more important in terms of changing the value than what the metals does in a given period of time. That's the first thing. I'm not a trader. One could say I'm a value trader, I guess. But I don't really care what the metals do. I don't really care what the dollar does. But what the dollar does and what the metals do affects a lot of people, because more than 90% of us actually just look at prices and swings on a daily basis, and we get affected by it. And of course, the market in the short to medium term sometimes give absolutely not a crap about what the actual companies are doing or what the value is, because you can see this now. For example, I mean, there's ton of examples of companies that have increased their value, but they're still down. Everything is down at the end of a or nearing the end of a down cycle. That's just how it is. And it's like silver is, I mean, extremely volatile. But this is a pretty big move right now. Silver is down almost 40% from top to recent bottom. I mean, not too many times silver has actually gone down a lot more than that. I mean, I consider this to be okay. At the bottom of the actual global financial crisis, it went down almost 60%. Now we're at around 40%. This was obviously the major bull market top. I wouldn't call this a major bull market top. Um, and I mean, this is what happens. You can see in the. Let's look at gold here and what happened during the. I think I actually did a. This was the global financial crisis. The dollar started ramping, gold went lower, and then when that selling or the when it actually gold actually topped before the dollar. This is where the dollar topped. This is where gold bottomed. So what are we seeing now? We're seeing a huge ramp in dollar as we're, in the global financial crisis 2, I guess one could call it, and we're seeing the same thing. Dollar is ramping, paper gold is tanking. The thing is, like, what Wayne Gretzky says, skate where the puck is going to be, not where it is. So everybody's obviously focusing on this move here right now. What has recently happened to us? And what do people tend to do? They take this or this and they project it forever. Okay, so down here, for example, in gold, it's like, gold has been going down. Everybody's talking about the dollar going up, which it did, and which it still does today. But I'm looking around the corner. What's going to happen after, let's say, dollar just keeps ramping? I mean, that kind of breaks the whole world, because that's a global reserve currency right now. So I'm bullish for what comes after, and that's probably not a lot of good things given the state of the world debt bubble. And like I tell people, I mean, where else would you want to park your money right now? Sure, you can be in dollars, of course. I mean, the U.S. has a huge, fiscal problem and debt problem, and I mean, they are basically, just borrowing more and more each year, and the U.S. seems to be, I wouldn't say disintegrating, but you can look at the politics, etc. It's not like the U.S. is getting better and better. It's getting worse and worse from a political standpoint, I would say. And I mean, in terms of conflict between left and right, and their debt problem is certainly not fixed. So I mean, the U.S. is a terminal patient, I would say. It's just that it's still the world reserve currency, and other countries, etc., are perhaps considered even worse. Like, I mean, there's a war in Europe, and the euro has been tanking relative to the US dollar. But it's like, I wouldn't like hoarding any fiat currency right now, because everybody's printing like crazy. Everybody has a debt bubble. Mario Draghi just tried to resign from Italy, which is one of the largest economies in Europe. So everything is getting worse out there, pretty much. And when that happens, regardless how crap the U.S. is or U.S. dollar, that's where people flee, and they liquidate paper gold, for example. I mean, if you own paper gold, you own paper gold. You don't own gold. I mean, paper gold doesn't have the same characteristics as actual gold. That's just how it is. So we're stuck with this paper gold thing. It's I guess one could call it a kind of a pyramid scheme, that there's a lot more paper than actual gold. But I guess the main point is, I'm looking what comes next. I have no idea when the dollar is going to top. People had no idea when the dollar was going to top here. What happened afterwards, when the economists and policymakers, etc., couldn't take it anymore? Something snapped, so they started printing a lot of dollars, etc., lowering rates, yada yada yada, and then gold went on a 3-year tear, basically, from, I don't know what the price actually was, like 650 or 850. I think actually less than that, around 600, I think, up to a peak of almost 2,000. So that, I mean, if you think about that, if you have a bit longer term perspective, if you look how cheap the miners are, especially the juniors, and you look at, okay, what could have happened, or what can happen in the next 2 years. So if you have dirt cheap juniors, and who knows, maybe we're here and there's more pain ahead, I don't know. But it's like, the only certainty I have is that what I am buying right now, what I own, I think is dirt cheap. So I'm by definition not making a mistake. Since I'm a value investor, I want to buy low, sell high, or buy cheap, sell when it's not so cheap. So I don't care really how the shorts looks or whatever. That's not even an input of mine. I look at, okay, how cheap do I think this company is relative to the value it's gonna be at in 1-2 years. That's it. Everything else is pretty much noise, but it's, kind of fun to look at charts, etc. But yeah, that's basically it. So it's like I look at the swings yesterday, etc. I'm just observing it, let's say, because that plays no part in my decisions really. I don't try to guess where gold is going tomorrow or next week or next month or silver. And like I've said, I mean, many juniors are already pricing in a way lower gold price than where it is. So basically, they're pricing in a crash that has yet to happen yet. And now we're in a crash. Okay, that doesn't make them expensive. And I got a comment here from Ryan. You can read this yourselves, but it's like interesting here. A family member of his, two of his paid subs, Headshake Kramer. I don't know if that is like Jim Kramer, the notorious contrary indicator, turned bearish today, 14th of July, both dropping gold and Barricks from longs. Okay, let's just look at Barrick here. So Barrick is down from the top, went down 42%. That's like, it's almost cut in half, and now they're selling out. Could that go lower? Sure, but I mean, look at the candle Barrick did today, and we're gonna look at GDX and GDXJ tomorrow. This is what I think is called a hammer candle, and you can see that this proved to be the low here, a turning candle, and this was another hammer, and then it went on from the lows here, went up 42%. Not bad. That was going into 2022. I don't know what I don't think the juniors did too much during that period actually. But here you can see, I wouldn't call this a shooting star, but this is what I would call kind of a shooting star, or at least, reverse hammer, let's say. I mean, that marked the top here, and then it went down. So we have the opposite candles now. I mean, in hindsight, it looks like, yeah, okay, this looks like a reversal, but we didn't know that, and then it went down like 42%, and now after the flush out, we have the same candle but in reverse, and you can see the volume is pretty good. I mean, it's highest volume since this period, which marked the top. Here you have a pretty big fat candle near the lows, etc. So it's like, from a trading or technical perspective, I don't know if Barrick is cheap, and that's not my cup of tea, because okay, Barrick has all the risks of any mining company, but it's a lot more diversified. But can Barrick increase its value by 200% without help from the price of gold in the next 2 years? No, I don't think so. They can't find. They have monster mines. They cannot create value that quickly, given how big they already are. So I don't play that game at all. But it's like, does this look like the time where you would get bearish? No, I mean, if everybody got bearish here, that kind of looks like capitulation selling, because that's like way late in this down cycle, I would say, because it's gone on pretty long, and this looks again like a bit of capitulation selling, and then buyers stepped in, obviously, which formed this potential reversal candle. So maybe everybody got flushed out today, or a lot of people got flushed out, and they're simply, we're running out of sellers. And you can look at GDXJ. Here we had a similar hammer candle, kind of like Barrick, and this, I guess, was a hammer candle as well, but this was an even nicer hammer candle now. Okay, volume is high. It's not extremely high, but it's quite high. And I mean, I guess one could argue, depending on where one sees the lowest gap here, some argue that this is actually the lowest gap, and that might actually be so. Uh, so there might be a lower gap here, and for whatever reason, the markets tend to want to close the gaps. But this gap got closed today. But there's potentially one left here, which is around, I guess, 27.5, and we're at 29.9 now. So that's still, I mean, how many percent is that? Uh, from the close today, that would be 10%, let's say. So again, from a risk reward, is there a downside? Of course, there's always downside. Anything can go down. It's like if you are waiting to buy this thing that cannot go down anymore, you will never buy a stock in your life. That's not what I'm after. Anything can get wildly overvalued and wildly undervalued. But if you even, have a, you know, again, it's like even if you did a broad, like, okay, this is more of a trend, but it's, okay, you buy any time it's under this line and you sell every time it's over this line, and increasingly so, you're gonna make money. You're gonna make more money than the actual just, just a hodl position. So we're at extremes, especially in the juniors right now. And I don't know if one would consider this a gap, but it's funny. It's like, if that's the case, that actually closed during the flash crash of 2020. So again, I don't know what it is with these gaps, but the market tends to want to fill them. So maybe again, if this filled pretty much all the prior gaps, then we have potentially one gap left, and that would be here. So yes, do I rule out the idea that, I mean, it can always go lower, but it's like, okay, maybe it goes down here, or maybe the bottom was today. It's like, I don't know. It's like, I don't want to be the one selling after this kind of a correction. That's not being early. That's being super duper duper late. That's akin to, I mean, basically selling here. I don't like the idea of that at all, and that even goes for, I mean, I wouldn't really want to sell Barrick here, let alone the juniors. GDX, senior miners, also kind of a bottoming candle, and you could see the opposite up here pretty much. So it's like, these are all signs, and you can see the volume again, high. Yeah, pretty high. I mean, if I was just a trader, I would think that this looks like a reversal. If I was strictly a trader and trading a trading sardine. What's more interesting, I think, that when silver was down almost 6% yesterday, at one point I think Barrick Mining actually ended down 10% or close to 10% on the day. But if you look at a silver price down 6%, I mean, one of the biggest crashes in paper silver in a day in quite some time. I mean, it's not too often it goes down 6%. Still, for a long period of time yesterday, Barrick Mining was just down 2.78% on low volume. So given that one typically says that miners have around 3x leverage, one could have assumed that, okay, then the silver juniors and even gold juniors, since they for some reason follow silver more than gold, should be down like, 10 to 20%, at least 15%. But a lot of juniors, actually, that I looked at, opened up minus 1 to 3%, and some close green actually. So, okay, what does that tell you? That you have this absolute flush in silver and gold and everything. So it's market panic plus a huge flush in silver, etc. Still, the juniors now are starting to, quote, outperform. Barrick Mining is down today. It ended close to down 10%. Yes, that's not really a crash. I mean, you can see Barrick Mining down 10%, every other week or so, or up 10%. So it looks to me like we're actually really, which you saw in the other, hammer candles, we're actually running out of sellers right now. fewer and fewer people are left that are willing to sell anywhere near these prices. So you're starting to see, I think, more buyers than sellers. So even though this would be the perfect excuse yesterday for everyone to panic, etc., literally everyone to panic, they still didn't go down that much. So that tells me that there are not too many people left, again, who are that emotional, who panic sells at extreme cheap levels. So that's a good sign. Not a good sign if you want to buy even lower, but it's like it seems that selling is running out of steam, because again, any other day or if this was 6 months ago, I think we would see a lot more selling, because there would be a lot more weak hands left. And if you look at Barrick Mining, yes, we're almost down now to we've almost at the global financial bottom, almost at the big bear market bottom in 2015-16. Who would sell this, even if you're just a trader? Basically, okay, points in time that Bear Creek Mining has been actually had traded lower than this period, and this period here, and this period here. So if you look out of this entire period, let's say we start from here. What percentage of time has Bear Creek Mining ever traded below this level? I don't know, what 2%? Any other time it's higher. That kind of tells you how extreme things are. And the same goes for, the tops. Okay, how often does it trade over here? Okay, that's one period. 2 candles here. 3 candles here. 2 candles here. So that's how long it trades at extremely high levels. This is how long it trades at extreme low levels. Okay, so in hindsight, would you have wanted to be a buyer or seller here? Would you want to have been a buyer or seller here, or here, or here, or here, or here, or even here, even though it didn't get that extreme where we are now, or here? These worked out very well as buy areas. You were up hundreds of percent in within a year. Okay. So given all we know about Bear Creek Mining, for example, we have the history of going back to 2008 or even farther back. The conclusion of what is probably the right decision, again, I don't like Bear Creek Mining, but just to make a point, even if you're a trader of optionality plays like Bear Creek Mining, it should be pretty goddamn obvious what you should be doing right now. You have a bunch of history to look at. You have the actual valuations in the juniors to look at. It doesn't, I mean, in my opinion, again, it's like people use this, where we are now, as an evidence of why you cannot beat the market, why you cannot make money in the juniors. But the very fact that they go down to these extremes, and if you look what happens after every extreme, and that goes for both sides, that's how you make money in this sector. So there's no way you're gonna have these absurd 100% returns if we never go down to these levels. I mean, what is the opportunity up here? Can it go higher? Of course. I mean, it went a lot higher in 2011, for example, when we got into, and this was, extreme bullish environment. Now we're the extreme bearish environment. So again, when you think about, okay, what might happen after this current flush is over? Just imagine that same thing happens, something breaks, or the policymakers response with yada yada yada, or the world breaks or whatever. Gold, even paper gold, starts to go to the moon within 6 months. Imagine what's gonna happen with some juniors if you bought them here, and we're gonna go up to sometimes in the next 2 years to a very high sentiment environment. So in my opinion, it's like, okay, let's give me 2 years. Okay, upside 1000%, downside from here is like, yeah, maybe 23%. I mean, that's kind of obvious in my opinion. So it's like, okay, the downside risk here, assuming the world doesn't end, is that for a period of time I might be down 23% extra from these levels for a period of time. And when it turns, which it always will, you're looking at, I don't know, 400 to, yeah, I mean, pick your number depending on what happens. So this is, I mean, I'm very bullish on my portfolio because where we are and where we're going, not because where we are and where we've been. Investing is not about hindsight. Investing is what happens in the future. So I have no reason to believe that we're not going to do something like this, or maybe it goes even higher, or maybe this time is when it goes a lot higher. But I don't get. It's like, I mean, take Hedgeye and Kramer, etc. I mean, if they were such great investors, I mean, they're not the youngest people around. I don't think they would need to be selling subscriptions 30 years into their investing careers or 20 years into their investing careers if they actually were really good at it. You don't see Warren Buffett selling subscriptions. He gives away free advice because he doesn't need subscriptions after decades of investing, because he's a billionaire. And what's his? And you can take Peter Lynch or whatever, or Howard Marks. I mean, what do they say? It's like, have patience and buy cheap. I mean, that's the buy something undervalued. That's basically what Buffett says. Mr. Market can, like he says, can go from exuberance to panic and depression, and that often happens, especially in this sector. And be greedy when others are fearful, like today. And it appears that even Kramer and Hedgeye are extremely pessimistic or bearish right now. Okay, I mean that kind of almost proves the point, doesn't it? I mean, I know they're not in juniors, but it's like, if somebody's told you like came out today with like, yeah, it's time to get bearish on juniors, and you just look up at some of the trading sardines in juniors, like, are you kidding me? This is where I'm supposed to be bearish? Jesus. Strategic metals, I think it ended, I don't know if it went down or unchanged actually. I think it ended either up. I think it actually went up 2.17%. So you have a crash, and that includes gold and especially silver, and I think, or was it down 2? I don't know. Anyway, it's like a small move, and I think that again goes to show that like we're really running out of panic sellers here. Because otherwise you could have expected it to be down 15 to 20% on a day like this. So strategic metals is already below the 2015-16 bottom. And we are, from the global financial bottom, that would still be 43% down. I have no idea what strategic metals was, what the value was back here. I just know that chart-wise price went down 43% below this level for a period of time, and then of course it went up like 3,000% within the next 3 years. So again, I don't, I'm bullish because where we are right now in the valuation, in terms of valuations, and what's going to happen after this gets worse and worse and something snaps. So that's why I'm bullish. I want to catch these. And typically, as you see, I mean, the rallies are typically very concentrated in time. So I mean, if you look from where it started to hit this level, that would be back here actually. So it took this amount of time to go all the way down there, and in a very short time span it actually retraced all these moves. And the same here, I mean, it took forever to go down to this bottom here from this peak, but it just took what was it, July, 4 months to actually retrace the whole move. So I don't know when it's gonna turn. It's just that I know it's gonna turn, and it's probably gonna be a very wild turn given how low we are. And again, you're already seeing that even today, yesterday, when you have absolute terror in the markets, the juniors are starting to not go down, or go down much. Some juniors were actually in green today, I saw. Some of the ones I own. So we're simply running out of steam to any downside here. So if a junior can close green on a market crash day when silver is down 6%, what do you think is going to happen when the metals actually bottom and turn up? So if they can go up in a crash, what are they going to do in a bull leg? That's, I guess the important thing. So again, I have no idea when we're gonna bottom. I just know that they're ridiculously cheap, and I have some juniors that I think are, let's say, 70% undervalued right now, so they should be maybe 200% higher, and that's just pretty much based on where they are right now. And then I think there are quite a few that can create a lot of value over the next 2 years. So again, if my average case is that they will have increased value by, let's say, 200-300% within 2 years. Okay, so they're going to be 200-300% more valuable in 2 years. And if you coincide that with what happens from a sentiment standpoint, so maybe they go up 200-300% on sentiment, but then they have created 200-300% more value. So that's why, why typically my portfolio goes something like this. Let's say it goes up 200-300%, down 50%, up 200-300%, down 50%, and I showed my portfolio chart before, so you can see that is in fact correct. That's basically it. Whereas a trading sardine, it just goes up and down, up and down. So I think this is what we're seeing out there right now. Just how much value you can steal, basically literally steal right now, is evidence how you beat the market and why you can beat the market. This is not evidence of why you cannot beat the market or make money. This is evidence. This is how you beat. You're not gonna have these 5 to 10 to 20 baggers if we don't have these corrections. So if you want to have really high outsized returns in the future, you need to have these crashes, because the expected returns from these crashes are like this. Even in a trading sardine, you can basically see where you should be buying and what the expected returns are on a 2-year basis. So okay, here you have a steep curve or relatively steep curve. Up here, your expected returns are negative, positive, negative, positive, etc. So that's basically it. So forget. I just point out the fact that if 95% of people doesn't beat an index, that means that everybody does the exactly wrong thing all the time. So I mean, common sense says that this is very cheap. History says that these are extremely low levels, and they will be up a lot. So I mean, everything rational points to this being pretty obvious buy zone. I mean, doesn't get a lot more obvious actually. So I mean, I don't. I mean, unless civilization ends, we're gonna have a mining sector. And given where we are right now, and given the state of the world, economy, etc., and some people, fear that. Well, I mean, some juniors might go bankrupt. It's like, sure, there are probably there could be juniors that go bankrupt, but it's like, how many juniors do I think would need to succeed for my portfolio to do well? I don't know, 30% from these levels perhaps. So basically I think like if 1/3 would survive, and they do some, the fundamentals go somewhere along the lines of what I expect, they're gonna make up for all the losers. It's like, just look at, the Crescat spreadsheet where they outlined, risk adjusted expected return for some of their holdings. I mean, some alone could basically multi-bag their portfolio. So theoretically, if we go into a sentiment high and that story is around, and they just keep, they get close to risk-adjusted blue sky, 1 or 2 positions of theirs could basically multi-bag the entire portfolio. So it's like, you're never gonna run out of excuses why you should sell down here. That's just a fact. Everybody's looking for excuses to do what feels best, basically stopping the pain or whatever. But if you're actually rational and take a step back, it's like pretty obvious that, I mean, again, what else would you want to have given the state of the world? Inflation is ramping, economies are starting to tank, house prices are falling. Yes, sure, rates are going up, etc. But what economy can actually sustain these rates? I mean, there's already, prime minister resigning in Italy. So I mean, that looks like we're heading towards more chaos. So when I think about it, what are my options? Let's say, okay, first of all, you should obviously have physical gold and silver, because that's like the hedge to everything, including your mining portfolio. But what else am I gonna do? Okay, let's say I don't have 100% in gold and silver, physical gold and silver. Do I want to buy Nasdaq here, or Dow Jones, or any other asset? Pretty much no. I mean, there is nothing I would rather own right now than physical gold, silver, and especially precious metals juniors. Even though I own some copper, nickel, etc. Because everything, I don't know if you saw the article I put up on my site, basically showing that London Metal Exchange inventories are near, century lows. So we're running out of metals across the board. So what's going to happen? Let's say they do print demand, pull demand forward by printing money, etc. Are they going to print more mines? No. So we're just going to, if we consume, if they hold up the consumer, let's say, and pull demand forward, we're just going to have even more shortages, and inflation is going to ramp even more. So there's basically no way I see it that policymakers can get us out of this inflationary environment. Sure, inflation can go down, but we're not gonna build a lot of super big mines in the next couple of years. There's no way. So if the metals inventory is already low, what happens if the world economy would get hot? It would come even more inflation. So basically, I see it as it's the basic economy. It's the food and metals, etc., which is basically limiting everything right now, because that's the problem they cannot print. So I'm simply buying up all the future supply and in-ground supply I can, because that's going to get increasingly more valuable. And I mean, what happens if things really get worse and some 5% of people in the West wakes up to the fact that, hey, I should probably own some physical real assets like gold and silver. I mean, the COMEX cannot, I mean, that's a paper Ponzi scheme basically. So what happens if we actually run out of physical metals? I mean, there's already been, shortages at some points in time over the last years when it comes to, silver and gold, etc. So what happens if you can't even buy gold or silver? The only option left is basically to buy it in the ground, which is the mining companies. So what happens if you buy around these levels and we go into a period of time with even more chaos, and then the commerce cannot satisfy demand, so people are scrambling to get some actual physical gold and silver, and they cannot get that, so they feel forced to protect themselves by buying gold and silver in the ground, for example. I mean, maybe we have something like this. So I have no idea how my portfolio is going to perform over the next, let's say, 2 to 3 years. I'm assuming at least 300-400% up, but it could be up 1,500% or 2,000, depending on what actually happens. I just know from these levels, even if we're not in a total melt up in metals demand or whatever, one would expect like 300% until the next sentiment high. But if something really goes bad or good, depending on how you look at it, who knows? Maybe they'll shoot up a lot more than that. Yeah, I mean, way too cheap in my opinion to be selling. I'm still buying as much as I can, increasingly so. And when you see that the juniors are starting to hold up on market crashes, so it's starting to like, okay, I mean, what are the odds that I can even get in cheaper than this? Because if they're starting to, quote, outperform on crash days, I don't know how much lower they will actually go. So I mean, in other words, it looks like we're starting to get into obvious bottoming periods. And again, I don't know how cheap GDX or GDXJ or Barrick is, but like the juniors are way past no brainers already. And sure, there will be stores that don't work out or whatever, but some stores will for sure work out, and they will work out very well. I mean, I'm expecting some 10, 20 baggers from my portfolio. And the average I would expect is like 300% or so in the next 2 years, 300-400% from the average play. Some will do way better, I think. Some will do way worse. But you cannot look at any point in history or valuation bias that would lead you to a rational conclusion of this is when you want to be selling. There simply isn't. Sure, you can follow Jim Cramer and Hedgeye, etc. Personally, again, my opinion is that let's just put it like this: if I'm slinging newsletters in 20-30 years, you should probably not buy them, because I should have done so well that I would need to sell newsletters. That's how I look at it. But I would rather take advice from Warren Buffett or people like that who actually have the results one wants, and they don't need to sell newsletters, but they freely share their advice. And since they have done very well, I think one should pay attention. Consider me biased. I don't know if I mention any stocks I own or are sponsored by, but I always assume that. I mean, it's just a waiting game, and it's like I know how it is. The lower this goes, the more inclined to sell people are gonna be. So if we go down today or next week or the day after, people want to sell even more. despite the fact that you can look at any rational factor like valuation or sentiment or yada yada yada, and it's obvious you just should be buying more and more. And then consider the fact that if only a tiny minority actually beats the market, how easy do you think it's going to be emotionally? Because people are not dumb. People are simply emotional. Well, there are some dumb people as well. But it's not that we're dumb which makes people, I mean, some of the best, smartest people in the world cannot beat an index. So it has, right now, it has nothing to do really with, how smart you are. It's just, can you have a firm grasp of the obvious, and can you stick it out? Because again, people look at the daily swings. The daily swings. They get emotional by the daily swings. But my case for a lot of these juniors is 1, 2, 3 years. So if my case is where I think the value of a junior is going to be here, what does it matter what it does on any given day? Because if I'm right, value is going to be here, and maybe the stock price is going to be up here. But almost nobody has that kind of outlook. Everybody looks at the price movements on any given day and try to guess if it's going to go down or up tomorrow. So yeah, I mean, stay strong, and again, it's like I don't use leverage. There's no end to stupidity, so I don't want to even gamble on that. I think you should pick juniors that are preferably cashed up, or at least have very good access to capital. High quality juniors, of course, because these bottom presents us with the opportunity where you can pick up the top 2% of juniors almost as cheap as you can pick up the absolute dog trash juniors. So there's no stopping you from any point in time during these bottoms to basically sell 100% of your juniors you have, if all those are pretty bad ones. Even if you're down 60% and you buy high quality stuff that's down 50%, I mean, that's still, I mean, it's gonna supercharge your expected future returns, even though it doesn't feel good to be selling at 60 minus and buying something that's only down 50%. But maybe the thing you sold has an expected return of 200%, and the things you bought have an expected future return of 400%. So you just created 200% extra, and you paid, minus 10% in spread between those. Well worth it. So this is not a time to be like throw your hands up in the air and like I'm not going to do any think about the quality of my portfolio or anything like that. No, this is when the big returns are created. What you do at these bottoms, this is where your big returns are created. So this is no time to be lazy. This is the time to like, okay, how do I set myself up for the highest risk-adjusted returns I can get for the next time we hit a sentiment high? Thanks for listening.